Hello guys, welcome back to the channel. This is Fidel. I hope you're doing well. So in today's video, I'll be sharing the second part of the previous video um, about the overall bias and the diet bias, the secrets to market structure. This is the second part. I shared the first part um, about 2 weeks ago. I talked about overall bias and the daily bias, the secrets to market structure. So guys, you remember that but before I go any further guys, just remember that you do not use anything you hear from my videos as financial advice. So if you remember what I shared previously, I said that we have a flow and then we have a ceiling, right? And the distance from here to here, right? This is the sell side liquidity and the buy side liquidity, and from here to here price will not just use a straight line like this one, right? This is not how price will move from one PD array, which is the sell side to buy side. Price will be creating swing highs, or also known as market structure. But mind you guys, this is the basic level of market structure, like the lowest level of market structure. So now, from the buy side to the sell side, from the sell side to the buy side, price will create market structure. And I said that market structure will show you the overall bias and the daily bias. I'll repeat that. So we have the overall bias, and then we have the daily bias. Let me explain. Now, the overall bias, obviously, you already understand. These are the PD arrays that are found on the higher time frame. For instance, if you move on the monthly time frame, on the weekly, on the daily, you will find that price will have some PD arrays that price is going to touch within months, weeks, or even years. For instance, let me remove this. For instance, guys, you can see that this sell side liquidity, just a second, this sell side liquidity right here, from here to the time it was taken, right, it's about over three, is that over 3 months? Yeah, that is over 3 months, right? So now that was over 3 months from here to here. For price to get this liquidity took 3 months, and then in the process of attacking this sell side liquidity, you'll see that price created structures to the downside. Higher time frame swing lows, creating this high, a low, a low, a high, a low, a high, until this sell side liquidity has been attacked. So that is the overall bias. That means you know which PDRA is being attacked on the higher time frame. We know which swing low is being attacked on the higher time frame. But in the process of reaching this sell side liquidity, price created structures in here that you could utilize for the daily bias. Because for price to reach a key area, okay, I'll give you another example. After price has taken this low here, the next overall bias, the next PDRA on the higher time frame, it becomes this swing high. That means after this sell side liquidity has been taken, we shift our attention to this swing high because price is going to attack this high. All right. But then we do not know how long it will take for price to come here. We have no idea, and there is no way you can tell that price will be able to attack this buy side within weeks or months or days. We have no idea, but all we know is price is coming for this swing high because price is moved by market liquidity, all right, liquidity and imbalance, inefficiency, and some inefficiency meaning there will be some imbalances in the market, and then price has to rebalance them, and then price is also moved by mitigation, so price will be mitigating some orders that were left in a drawdown. All right, i'll give you an example I'll give you an example. When price went up here buying, okay, they go through a reaccumulation here. They're accumulating long orders because smart money, they'll buy in down movements and they'll sell in up movements. So within these down movements, they were accumulating long orders to go, buying, right? So now thus in that process, and that's why we see swing highs and swing lows, because price will attack sell side liquidity, like in this case, because if they have, for instance, guys, let's say 100 billion, right? They won't stack everything here. They will not buy everything here. They have to buy because then the market will move in an unusual manner, right? So they have to buy in small quantities. For example, they'll put a few millions here, and then more millions here, more millions here, until they reach their target. And most of the times, if the target is this swing high, the aim is not to take out retail traders. It could be that they have put billions of sell orders here that they need to come and correct. So it's not all about taking retail traders out, because we do not matter. I mean, before this, in their sight, we do not matter. We are just a small fish in an ocean, right? So now, coming back to what I was talking about, the overall bias, once this sell side has been taken, my eyes are taken here. This becomes my overall bias, the overall target. As long as I've seen that price has confirmed by shifting in structure after grabbing this liquidity, this becomes my overall bias. So every single day, every single time I come on the charts, I know that this is my overall bias. This becomes my overall bias. But then if I have the overall bias and I understand that price will not come here in a single day or in 1 week, and in this situation, you can see price attacked it in 2 months, guys, in 2 months. So now I have to rely on the structures that are being created in this range. So on the higher time frame, we are bullish, and this is our overall target or our overall bias. But since price, or rather since the smart money will buy this low, and they will keep accumulating more buy orders in here. Every time they come down, they're accumulating long orders. Every time they accumulate long orders. That means it's not every single day that price will be bullish. Let me repeat that. If they have to reaccumulate, let me put it here. Or let me write something else and open another one here. So we have accumulation, and then we also have reaccumulation. Right. Okay, there you go. So we have accumulation in here. Once they take this sell side, they have money, liquidity right here. It's grabbed by this wick that went below this support area. Price goes up, and then after putting in a high, price comes back down. In this movement down here, they're accumulating more orders, and that is what I call reaccumulation. So they are still stacking more buy orders. So if I understand that price goes through a phase called reaccumulation, that simply means that it's not every single day that price will be bullish. Even though my overall bias is bullish, it's not every single day that price is going to be bullish. Price will be in reaccumulation. That means we will have some selling days. And this is where the daily bias comes in. So you ask yourself, every time I wake up, I ask myself, I know, okay, the daily bias, the overall bias is bullish because we've taken sell side on the higher time frame, and we are going for the buy side on the higher time frame. But then what is the daily bias for today? What is the bias for today? Because even though we are overall buying, we could, for the short term, sell. Let me repeat that. Even though we are buying on the overall overall bias, according to the overall bias, we could be buying, but then for the short term, we could be selling. So I ask myself, what is the bias for today? That is my daily bias. So I gave you a few examples in the previous video, and I'm going to give you a few examples that happened in the past 2 weeks, maybe about 3 to 4 examples before I could be done with this video. And now I said, now for the daily, for the overall bias, what do we look for? We look for higher time frame, PDR raise, okay, higher time frame PDR raise, that is overall bias. And then we have lower time frame, lower time frame PDR raise for the daily bias. All right. This is how you determine the daily bias and the overall bias. The overall bias, you look at the higher time frame PDR raise. It could be a swing high that has to be taken. In this case, we have it here. And when price was coming down, we have a swing low Here we created support and the price went through it right here. So price has taken buy side on the higher time frame, and now the next higher time of PDRA, it is this swing high, because PDRA is not just something that a PDRA basically it's something that you are basing your trade on. Let me repeat that. A PDRA, it's something you are basing your trade on. If you are selling, you need to ask yourself, what's causing this sell? If you are buying, then you've got to ask yourself, what is the cause of this bullish move? Something has to be causing price to go up. Let me give you an example. You see price for days, price has been consolidating. Obviously, we all know that price has been consolidating with EU and GU. You see, it's been consolidating because we take high time frame, swing high. We have a breaking structure. Price comes back into the structure, and we hit this daily order block. So this daily order block is my higher time frame PDRA to the bullish movement, to the bullish move. Why is this an order block? It is an order block because if I zoom in, you will see that price created support. Can you see it, guys? Here, price created support, and then support was broken, and then we thought price was going to continue going down, but then suddenly price comes back up and broke these highs. So 1 2, these two candles is the bullish order block. If price had not taken any liquidity in here, or if price had not broken any support level here, this wouldn't be a bullish order block for me, even if we would be in a bullish structure. So I could utilize the bullish structure, but I wouldn't call these two candles as a bullish order block. And I know many of you will be surprised, but then we understand these concepts differently, and then we apply them differently, and of course, it doesn't matter what you call an order block. I think what matters the most is to know how to utilize it. Okay, so that's just me. So now we are inside this bullish order block. And why am I using the second candle instead of the first one? I'll tell you why. Because if you take your fib level from here, um, I'm sorry, from this high to the low, okay, you will find that this candle opened below 50%, below equilibrium. Can you see that? This second candle opened below equilibrium. What does it mean? It means we are, it means that you guys, about discounts and the premium. So we know this candle is in the discount. So I'll use this candle instead of the first one because this candle is in the discount. All right. So now let me go to H1 and I give you examples. So we have already established that on the higher time frame we are bullish, but then we have taken liquidity. We could be bearish. Yes, we've taken liquidity, but we haven't had any break in structure, any shift in structure. Here I mentioned that we had a shift in structure. Here we had a shift in structure. Okay, we need to wait for the previous structure to be taken for us to say, okay, now we have a reversal. Remember, an SMR or a smart money reversal, it happens like this. And then boom, like this, and then we come back in here, we continue down. Okay, so um Some of you guys were even messaging me that since EU and GU have taken a hard time frame PDRA, so we are going bearish. And I mentioned to you that we are not yet bearish because we need to have a smart money reversal. We need to take the previous structure. That's what I said. We need to take the previous structure. And you are like, no, price has to start selling now. I'm looking for sales. I don't like arguing with people because I'm not your mentor. So since I'm not your mentor, I don't argue with you. When I tell you something and then you try to engage me in an argument, I mean, I stop there. I don't continue chatting with you because you don't listen to what I'm saying. You could be right. You could be right because because we are actually using different, I mean, the same concepts, but then different trading styles. So in your style, you could be looking at selling, and in my style, I'm looking at buying. Okay, but I do understand structure. Believe me, I do understand structure, and I say that we have to take the previous structure for us to call this market bearish. And as you can see, for the whole week, price failed to take out the previous structure. I will show you also on the GU. Same thing. What is the structure? This is the previous structure. This previous candlestick is the bullish structure. Price, and I said, and one of you was even talking about GU, it will come into this fair value gap, this fair value gap, and then we go down. I was like, yeah, it could happen actually. It could happen since we've already taken this buy side liquidity, this liquidity pool. And but I said for that to happen, we need to see price coming down. We take this structure, and once we come back in here and we fail to go higher, then we would call this market bearish. But at the moment, we are not bearish because there's no structure that has been taken yet. So let's go back to EU. So let's summarize this. On the higher time frame, we are bullish, right? We are bullish. But now let's go to H1. I'll give you a few examples and then I'll wrap up the video. Now, let's start with this on the 14th of April. So I ask myself, the overall bias, we are bullish. What is the bias for today? For me to know the bias for today, I need to look at the PDRAs on the lower time frame that price is reacting to. So what is the PDRA for today? Here, look at this. This is the previous day's high. Previous day's high. What happens? What happens when price takes previous day's high? We expect a market maker sell model. You guys, you already know about um, market maker buy model and market maker sell model. You know about these models, right? This is basically the 2022 model from ICT, you know. So the lower time frame, previous day's high has been taken. Do we have a shift in structure? This is in London. New York opens on this candle. Let's go to M15 and check what happened. M15, see, M15. Now, this was a previous structure. A perfect market maker sell model, we should take a previous structure and then we come back to sell. Let me repeat that. A perfect market maker sell model, we should take the previous structure for us to sell. What you see here, is known as a breaking structure. These are just breaking structure, not a shift in structure. It can also be known as an OTE, optimal trade entries, right? So we have a breaking structure, we have new spike up, but it failed to take out this high, you know, and then I remember I had my sell, my entry was somewhere here. I even posted this, I think. And then my stop loss was above this high because I always use swing structures to put my stop loss. It was here because this is where if price was gonna come above this high, then it would invalidate this structure. And then what happened? We sold, price went down. Now we are selling, I don't know how many pips was that, close to 100 pips. So price went up to 100 pips, selling inside a higher time frame buying bias. So in a higher time frame uptrend, which we have identified a higher time frame overall bias to be bullish, we have a daily bias to sell. Selling inside a bullish trend because we are using a daily bias which reacted to a previous day's high as our PDRA to sell, which is a market maker sell model. Okay, let me continue. Let me continue with more examples here. So now here, this was on the 14th. So let's look on the 15th. This candlestick is London. London opened. London opens 10 in the morning my time. This is London. And what happened with London? Because I'm asking, like, you come to the charts. This is what I do. I come to the charts and I'm asking myself. We have a higher time frame bullish trend and I ask myself, what is the daily bias for today? And obviously, you can see this high was taken. You see this is what is known as a T.O.T soap. Okay, and once it was taken, what happened? Price left this this bearish order block with fair value gap. Even though I don't use fair value gap for entries, you see, now we have a shift in structure after price grabbing liquidity. Price comes back in here. What is this? A bearish breaker. A bearish breaker. How many pips? 75 pips. All this is happening inside a bullish trend. We haven't forgotten, guys, that we have a higher time frame bullish bias. We haven't forgotten that. But we are utilizing the daily bias using the lower time frame PDRAs to give us an entry. What is this known as? Market maker sell model, because we grab the liquidity, a shift in structure, 2022 model, guys, and we sell. All right. And let me look for another example. Um, let me switch to H4. Okay, let me use this. So now price tapped into the higher time frame order block, which I showed us. Remember, guys, this order block. We go back to H4. You see, price This is also a breaking structure. All right. Now, another thing we notice is that price took out this swing low, swing low, which means that is liquidity. If that is liquidity, this tells me that all these candlesticks, one, two, three, these three candles are order blocks. Back to H4. One, two, three. These are bullish order blocks. Okay? But we need to utilize the order block that is in discount. So we use the fib from here to down. This is the equilibrium. So we ask ourselves, which candlestick, which order block is in the discount? This one here. This one. And then you asking me, why didn't you use this one? Because this candlestick here, this candlestick is in the range of this candlestick. So I can't use this one because it's in the range of this candlestick. So this, and if you see the momentum of this candle and this one, look at the momentum. So this is the order block you have to utilize. And then you say, but price went below it. Yes, it can do that, but you can see no candlestick closed below. And another thing, you can also use the high to the low and use the equilibrium, the 50% of this candle. I beg your pardon. You see? Right here. And you can go ahead and add the 60% if you want, 62%, 50 to 62%. It's okay as well. You see? And now, bullish price. Now, we buy from here. So now we are back in the bullish, in the overall bias of the higher time frame, because we've been selling, right? But even though we've been selling, the higher time frame bias is bullish. Now we have a bullish setup, which is in line with the higher time frame overall bias. All right. Let's see if we can see something on the British pound. So you can see we are in this structure. Price has failed to break it. Let me remove this so we can use the hourly time frame. So now, just as usual, I ask myself, what is the bias for today? And then I notice we've taken a previous day's high. We have a breaking structure, a shift in structure. All I wait is price to come back in the breaker. 15. Price, yeah, we didn't touch the breaker, but because of news, price sparked in the breaker, which had imbalance. Look at this imbalance right here. And then price sold. Price sold for about 120 pips. So 100 pips selling inside of a higher time frame bullish market, because this is today's bias, not the overall bias. And let me remind you guys, I'm not telling you to trade this way. I'm just sharing you sharing with you guys this information. It could help you in one way or the other, but I'm not in any way saying that you should, trade like this. You could just be waiting for bullish setups in here. That is good. That is really good. That's okay. But if you could trade this way as well, looking the daily bias and the overall bias, it's also good. So now on the second day, we have another grab of liquidity. Go to the lower time frame, maybe M5. Let's see if we have anything. M5. Yep. We have an order block and a breaker. This is a breaker. Right? Actually, if you move to much lower time frame, it could be much easier to spot. Let me see M2. Okay, we shift in the structure here. Price goes back up into this breaker, we sell. So 2 consecutive days selling this market, even though the higher time frame buyers is still bullish. So I mean, you can go on and on, guys. You can even see here. Now we come back in the higher time frame bullish move. Grab liquidity. You could go on the lower time frame to find it for entry here, and price continue going up. So what am I looking at on the higher time frame? As long as price is still held up in this structure, price is still bullish. Once it's broken, then I will start anticipating price to go lower, and then have to look for the next pool of liquidity that price is going to attack. It's the same thing with the EU. Same thing with the EU. I beg your pardon. Once price breaks this structure here, then we can look for price to come back in here to continue down. Then we'll look for more liquidity push the downside. But at the moment, we are still bullish. Okay, so let me see if there is anything that I left behind. I think I've said it all. So thank you guys for watching this video. Share, subscribe, and leave a like. And of course, let me know if this has helped you in one way or the others. Otherwise, stay blessed.